ECB rate cuts and inflation. Germany's economic outlook. Eurozone heavyweights France and Germany both reported positive inflation news on Friday. Although Germany also saw a rise in unemployment, just a day after the European Central Bank, ECB, reduced its key interest rate by a quarter point in an effort to stimulate an economy that is currently stagnant. According to EU-harmonized data from the German statistics agency Der Status, German consumer prices in January increased by 2.8% compared to a year earlier, matching the rate recorded in December. While this figure exceeds the central bank's target of 2%, it is lower than market expectations, which supports the ECB's decision to lower borrowing costs. In contrast, France's consumer prices in January rose by 1.8% compared to the previous year, the same rate as in December, as reported by France's statistics authority. Services inflation, a key driver of overall inflation last year, slowed during the month, although energy prices increased due to a low comparison base from previous figures. While German inflation is moving in a favorable direction, a continued slowdown will depend on service providers reducing their pace of price increases, according to KfW research economist Stephanie Chunwald. She stated, "This should only be a matter of time, as the ongoing economic downturn is limiting companies' ability to raise prices, and wage pressure is also noticeably easing." In January, German services inflation, a labor-intensive sector that has been resistant to change in recent months, fell slightly from 4.1% to 4.0%. With German elections scheduled for February 23, the incoming government will face various economic challenges, including rising unemployment. Workers in the manufacturing sector, which has not yet returned to pre-pandemic output levels, appear to be disproportionately affected. Prominent industrial firms such as ThyssenKrupp and Bosch have recently announced layoffs, while car manufacturer Volkswagen plans to reduce its workforce by 35,000 by 2030. Germany continues to grapple with high energy prices, dwindling demand for its exports, and the potential threat of trade tariffs from the Trump administration in the US, all of which pose significant hurdles to economic growth. Following the ECB's announcement on Thursday, the deposit rate has been decreased from 3% to 2.75%, marking the fifth reduction in 8 months as inflation in the Eurozone eases. Political fragmentation may also become a concern after the elections.